guys, good afternoon. So let's get started. So last week we had quite an interesting week, especially with the yen pairs in particular, and it has been very interesting trading, and actually it emphasized or brought home the importance of doing the pairing by matching the strong currency with the weak currency. It has allowed us, especially the ones that had the long-term positions, to withstand certain market volatilities, especially what happened with the euro and the dollar in particular. So by doing the correct matching, and we were able to withstand the intraday volatility that came across in the yen and the like, and allowed us to stay with our positions and to end up gainfully on those positions. So anyway, to start with, we're going to start with the dollar as usual. And if you look at the chart of the dollar, I want to put another chart here. This is a cleaner chart for the US dollar that without the lines, and this is a weekly chart. And as you can see, we pretty much have been in a, yes, we are in a bear market. We are pretty much near the bottom of the range. But look at the last couple of weeks here. We have been, as of September, been kind of pushing higher. We have put a high, or a, we can call it an interim structure point at the 81.51. And if you look at the last week, this is a very important technical candle pattern, because as you can see, we were coming down through a decline. I mean, we were pulling back. I mean, if you look at the daily chart for the dollar index, this is the daily chart. That was the first push to the upside, going above this minor structure, which is around the 80.30, and we pushed higher, putting the high, as I said, at 81.51. We are now pulling back, which is a normal correction, which is, as you guys remember, we were talking about that before, which is the wave of disbelief. Everybody's pushing the dollar to the downside. They're looking at the fiscal cliff and the like. They're looking at the dollar will continue its decline. But if you look at the last 3 days, this day, and this day, and of course this is the day 4, which is basically 1, 2, 3, 4 days. If we sum it up in a 1 weekly chart, 1 weekly bar, that is that green bar, and you can see that we have sold off below the previous daily low, and also previous weekly low, and we also sold off below the previous 2 weeks low. And it was quite a big range week. We had a big sell-off. I mean, that you got a continuation of 1 week decline, the second week decline, then the third week we had a decline, which is last week, and then we turned around. I'm just describing this candle for you. Turned around above the previous week low, above 2 weeks low, and then we exploded upward, and then we ended the week closing in a neutral, but with a big positive bias. This is technically a strong bias to the upside, because we have now a weekly buy signal, because we had a double sell signal and then we have reversed. We had a short covering rally that took us to the high of the week, and then we sold off a little bit towards the end of Friday. So if we're going to look at the daily chart and putting our lines so that we can identify where is our biases. You could see this is again the 3 days or the summation of the week, and we came above the 80.04, which was our first buy signal, if you recall, from last week planning session. And then we traded to the 80.30, which is the second structural point. And as you can see, when we traded on Friday above the 80.30, we pushed all the way to about 81. The next structural point is 81.02, so we're pretty much there. And that kind of explosion, that kind of momentum that came into the dollar on Friday is an indication that you got market orders being triggered. That is big momentum coming into the market. There are a lot of buy orders that has been triggered to the upside, and once that has been triggered, it took us all the way. This is solid buying. That is a very big range. That is solid buying that's coming in. Now, of course, looking at that candle, one would be concerned because the market didn't close near the high. But how concerned should we be? As long as we have closed above the previous daily high, which is the 80.32, as you see there, this keeps the buy signal intact. And if the 81.32, which is the daily high, is one and the same as my structural point, that too is an additional validation of the buy signal. It has traded above the 80.31 structure, and the 80.31 was also the previous daily high. So that is a good sign for the dollar, and that should give us the bias. As long as we're above the 80.31, then we should be continuing with the bias on the US dollar, and we will try to match it with the weaker one. So based on that, we are going to keep the dollar now. We're going to change the dollar from being negative. We're going to be positive on the US dollar. That is a positive sign for the dollar, and we should be looking for a continuation to the upside as long as we're above the 80.30 structure point. Okay, so with that, we'll looking at the other pairs that are strong or whatever that are trending. I'm going to keep the yen to the end. Let's look at the Aussie dollar. The Aussie dollar, as you can see on the chart, is pretty much still in a bull market. I mean, this is this market is still in a bull market. It's near all-time high. I mean, look at this. I mean, this is historically from 2002, from the bottom that you see at the lower left-hand side. Well, I mean, this is as high as it gets. The only thing that's missing with the Aussie is that there is no cash inflow that's coming in, or there is no fresh money that is coming into the Australian dollar to create a fresh new demand to push the Aussie to the next leg higher. So we are going to be positive for the Aussie. We're going to maintain. There is no reason for us to actually decide that we're going to sell it or be bearish about for the Aussie. We can stay with the Australian dollar, as long as it's sitting. It's going nowhere in a hurry, but if you're matching it with another currency, which is like the yen, for example, or with the euro, these are good pairs that you should be staying in. So our bias for the Aussie would remain to the upside. And this is the chart for the Aussie with our key lines. With our structure points, and you can see the top structure point is the 104.94. We closed the week this week at 104.81. The previous weekly high is 104.73, so we are above the previous week, and we are above 2 weeks high, and we're above 3 weeks high, and we're above 4 weeks high. So we're above all these highs, so there is no reason for us to be anything other than positive for the Aussie dollar. Okay, so to go here, and we're going to put the Aussie. Last week we were kind of positive with a neutral, kind of positive to the Aussie, so we were going to keep the same because we don't have a breakout to the upside. If the Aussie dollar goes above the 104.94, then we will turn positive to the Aussie. Right now it is below. There is this level of resistance that is stopping or capping the move to the upside for the Australian dollar. The next pair we're going to look at is also, which is as strong as the Aussie or similar, which is the Canadian. It is the same pattern that you can see with the Aussie. We have closed above the previous 2 weekly highs. The move is still to the upside. We came below a structural point here. I'm going to go down to the daily. You're going to see it in a minute. But we do have a structural point, which is the 10099. We traded below it, and that right here on this week, let me put the daily chart for you so you can see it. Right there on this week here, that would have been our structural failure to the downside, and we would have been looking for a further decline or a big bear push to the downside. Having coming back to test it here, that is one of the classic patterns of a bear market, because that's what you want. You want a structural failure, you want a push back up to test the structural point, and then you're looking for a second leg decline, which we did get. But what we had now is we're coming back again to retest this 10099. So we are now on Friday, we did trade above the 10099, and we closed the week at 1.0101. Right there, that technically cancels that structural point, that bear market. As long as we close the week above the 101, above the 10099, that technically cancels the bear market, and we should turn positive on the Canadian, and we should be looking to be buyers of the CAD. And our sell signal for the CAD is very easy, is very simple. Any trade below 2 pips from where we are right now, below the 10099, that would trigger for us the sell signal in the CAD. So as long as we're above the 10099, we are bullish, and we'll be looking actually to buy the CAD. I am more inclined to be a buyer of the CAD than to be a buyer of the Aussie. Why? Because we do have now at least a test. Probably we can go up to the 101.51. The Aussie has topped up near the high for a very long time, for the last 2 years now, from 2011, pretty much sitting at the 104, 105, let's say pretty much the 105 level. If we get above the 104.94, which we are 10 pips away on the Aussie, we're going to jump on the Aussie and buy it. But right now I have some more room to the upside. I have more room to the upside technically, which is this distance here between this where we are right now and the that structure point, that will allow us to have some movement, if you will, in the CAD. So we're going to look at, let's put the CAD. So the CAD, we are going to be, well, let's leave it as is. So we're going to maintain the Aussie and the CAD in the same way. So we're being bullish on the dollar. We're going to be positive to neutral on the Aussie, and we're going to be positive and neutral on the CAD. And keep in mind, we have 10 pips between an explosive move to the upside if we get it in the Aussie dollar. All right. The next one, which we are going to look at, that we have a trend in, which is the euro. I'm sorry, the yen. Let's do the euro first before we get to the yen, because we know from last week, from the last 3 weeks, that the yen is in a bear market. I want to finish with the yen because there is a nice technical pattern I want to show you. So let's do the euro first. This is the daily chart for the euro index, and as I have mentioned to you, this is, if you can see here, look at this. Once we came below here, this was our structure point, and that was the beginning of a bear leg. Once we come back above and test it, we're up till here, we're still in a bear market. Let me show you. If we come back and test the structure point, that means that we are in a bear market, and that is a technical setup that the market should decline and come down. The next time it goes above it, if it does go up here, that means it cancels this bear market signal, and now the trend resumes. What, have we seen something like this recently? Have we seen a structural point that we broke below that structural point and then we're coming back to test it? Think about it for a second. It is right there in the Canadian. There is your structure point. This is where we came below it, and this, setting this aside for the time being, this is where we are at now, the 101, right above the 1009, and right now that should be the beginning of the next leg up. And that is why I was telling you I am slightly more positive on the Canadian than I am on the Aussie, because once I have a trend change, I have a bear market that's turning bullish, I should anticipate or expect an explosive move, at least for the short term. I have that technical setup that will trigger some buying for me in the CAD. Okay, so with the euro, let's go back to the euro. I'm going to answer your questions when I'm finished. So this, as I said, this was the structure. We came above it, and right now we are still above, being at 129.28. We're still above the 128.33. Technically, this is a big price acceptance. Technically, we're still having a positive bias for the euro. We should be looking for one more push to the upside. If you look at those the daily low, we had 3 daily lows to the Friday, Thursday and Wednesday. This low here is 128.81. The low that we set on Friday was 128.77. So we did trade below this low. We did trade below these lows, if you will, here, which is the 128.87, 128.90, and we traded as low as 77, 128.77, and we turned around and we closed the week at 129.28. That, we are about 50 pips above the low. It is not yet a screaming buy, but it is a buy because we did not have any capitulation to the downside. We did not sell off, but we actually kind of reversed. So right here, I'm looking for the euro to stabilize and actually slightly push higher. So I'm going to be neutral to positive on the euro. So for the euro, we're not going to be positive, slightly negative for the euro. I'm looking for the euro to move sideways and to move slightly higher as long as we're above those structural points. Okay, the next one we're going to look at is the Swiss, and this is the one that I'm a little bit concerned about. I'm concerned about it because if you are going to squint, I do have here in that last push, I have a failure to make a high. I can argue on a squinting basis that this is a structural point, which is the 107.08, and I can see that we have pushed and we broke below the 107.08. We put a low of 106.58 and we closed the week at 107.01. So technically I am more negative on the Swiss than I am on the euro, but that doesn't mean, and I have been saying that the euro and the Swiss are closely related or pretty much moving one to one, but in this case the Swiss is a little bit more weaker, and that is something that is going to be welcomed by the Swiss National Bank. So the Swiss National Bank is not really going to object about it or going to do something about it. They're kind of comfortable with that's what they want. It would have been concerning if it was the other way around, if the Swiss was stronger than the euro, but in this case the Swiss is weaker, and unless it gets above the 107.08, then we are bearish on the Swiss, and we're going to be looking to be Swiss sellers of the Swiss. So here we're going to be, for the Swiss, we're going to be negative on the Swiss. The last of the other, not the last, we have now to do the British pound, and there isn't much of a surprise in anything that has to do with the pound lately. It is pretty much in a range bound with a negative bias. This is the weekly chart for the pound. I mean, from 2009, it's actually going nowhere in a hurry, as you can see. But right now, we're looking at this here. That is a sell signal. That is pretty much a sell signal in the pound. We have traded, put the high in at 160, 130. We are about 100 pips from the high. We're below the previous weekly high and below the 2 weekly high. So that is pretty much a sell signal right there. And you can see it here on the weekly, on the daily chart. So we should be negative on the pound, and we should be looking to be sellers for the pound. So we're going to be negative on the British pound. We'll be looking to be sellers of the British pound. Now, last but not least, the one that we haven't done yet is the Japanese yen. And the Japanese yen, as you have seen from last week, we have been, as I've been saying, that the yen is in a bear market. And this is what I wanted. That's why I left it to the end. This is the chart for the Japanese yen. We are now, if you begin to look here, look what I have, this rectangle over there, here, which I'm going to remove, and then this rectangle. This is exactly the same setup that I showed you in the euro and in the CAD. That was the structure point. We traded below the broker, came back and tested it twice, and then we pushed down. That is the technical bear market. This is the technical shape of the bear market. Then you have another structural point. So you got one structural point and you sold off. You got a second structural point and then you sold off. This here is your third structural point. So definitely we are pretty much in a well confirmed bear market in the yen. If I go to compress the data a little bit, you can see now that even though I had 3 structural failures within that range from the 119 to the 129, which is 1,000 pip range, that big trend, that humongous trend, I'm showing you a cleaner chart here. That humongous trend that you see here, this is a weekly chart. If I'm going to ask you, according to follow the rules, where is our trend change, it would be obvious to say that we know that this here, that would be our structure point right there, which is the 119, and trading below that structure point will actually take this whole trend, and now we are definitely entrenched in a bear market, and we're looking for below this a major capitulation to the downside. So that is where we're looking at, which is the 119. If I'm going to space it like that so I can widen the image for you, you can see that for the last 3 weeks, last 2 weeks if you will, we have been in a very narrow range. We have been the closers are closer to the low than they are to the high. There is no let's say there's no strength, if you will. There is no anything that is supportive to the yen. You can see that this thing, every time it raises its head, it comes down. This is your daily chart for the same 3-week period, and there is your range that comes up. So right there, the 3 weekly lows, you can see them right there. They're pretty much the same. So we are looking, we're bearish to the yen, we want to sell the yen, and of course once it trades below the low, which is the 120.07, which is about 30 pips from where we are now, then we're looking for a capitulation, and we need to keep an eye on this. This is going to be like a magnet that's going to be pulling these prices to the downside. They must, let me take the word must away, they should be looking towards this. They want to trigger all the stops that are sitting below this these lows. So with that, we're looking to be very bearish. We're going to remain bearish on the Japanese yen. So going to our chart, this is the setup that we are going to continue. We're going to be bullish or positive on the dollar, or let me back it up. We're going to take the yen first because this is the bona fide trend. So we're going to go long the dollar yen. We're going to go long the Aussie yen. We're going to go long the CAD yen. We're also going to go long the Euro yen. And then we can go long the pound yen and then the Swiss yen, in that order: dollar yen, Aussie yen, CAD yen, Euro yen, pound yen, and then the Swiss yen. Then to find some other pairs we can look at, we're going to take the dollar with the Swiss. We can take the dollar pound. We can take the CAD versus the pound. So we can go short the pound CAD. We can go short the pound Aussie. We also can go short the Euro Aussie. So to sum up, a wrap up, we're looking at selling the yen across the board, starting with the dollar yen, Aussie yen, CAD yen, Euro yen, pound yen, Swiss yen. Then we're going to go along the dollar Swiss. We're going to go short the pound dollar. We're going to go short the pound CAD. We're going to go short the pound Aussie. We're going to go short the Euro Aussie, and probably we can go short the Euro CAD. Okay, that is the indices. So let me save that, and if anybody has any questions, feel free to ask.